What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Don't forget to smash that like button. So, a few things. I actually have a coffee mug for you guys. I mean, it's optional, but it's part of the apparel. I'll put it in the comment section. And it's part of Darth Dividend's arsenal. So, it's something that if you're interested or you're making buying and trading stocks or looking at your stocks, or if you're watching this video, you can drink this coffee mug and enjoy having dividend investing and the art of dividend investing in the drip. So that's what we're all about with this channel, and it's all about passive income. So there's a stock that I bought. It's a bank stock, and I'm actually going to discuss another stock after this. But why I am buying the stock and why I really like it. And I actually have a credit card from these guys too. They're kind of a regional bank, and I really like these guys. And I'm going to continue to reinvest my dividends and or buy more shares of the stock because there's a lot of potential, and it also has a stock split history, which I'm very interested in if this price starts getting bigger over time. Really did a good rebound with the recession. I'm going to be honest with you. With investing in bank stocks, I mean, you have to be really stupid as a bank to screw up now. I mean, the regulations, everybody's so careful with how they give out loans. I mean, my credit score is fantastic, and I got a loan. I always tell people to buy used cars, but really, I like this stock, and I really like its stock split history. And I just, with looking at the stock, there's a lot of potential. It's within my dividend range. It hasn't done very well against the S&P, which is even better as a stock for dividend stocks. It's not a bad one to put in your traditional Roth IRA either, or if you're a day trader. But I really capitalized on the stock when the pandemic hit. So there's two things that I did, and there's two stocks that you guys should really look into is the financial sector and the real estate sector. So I really capitalized on those two that took a huge nosedive. And this stock I'm going to be long on. So I'm going to do a quick stock and dividend analysis. I'm going to just tell you what I think of bank stocks and financial stocks because I really am going to add that to my M1 Finance dividend portfolio eventually. But this one's on my Etrade dividend portfolio. I'll show you how many shares I have. So one thing with banks are, you know, it's very hard, okay, for a bank to lose money. Okay, I just think nowadays, I mean, you have a credit card. Okay, anytime here's one of my reasons why I like investing in financial stocks, especially bank stocks, because anytime you swipe your credit card, okay, say like I go to Giant Eagle in Ohio or Kroger, okay, they swipe my credit card, they have to pay a fee for this credit card charge because I'm going to tell you, and I'll give you an example in Northeast Ohio with the power of bank stocks and credit cards now. It's easy to get a credit card. I mean, obviously they're looking at your scores better, but nobody went into the store. Okay, I'm going to give you a few examples of why I think bank stocks are fantastic. And if you have a good credit score, you can actually treat your credit card as almost like passive income if you make payments on time because you get a cashback reward and they try to get money off you, but they actually make money off you, or I'm sorry, they actually make money if you're using your credit card, even if you're paying stuff on time. So first, I'm going to reiterate this. Anytime, okay, you go to a vending machine, you go to a restaurant, you get a cashback offer, 3% on groceries, 2% on groceries. Um, you know, uh, I've heard of 5%, so you get cash back. Anytime you swipe that credit card, okay, as long as you make payments on time, they get money from businesses. Okay, so I can tell you, I almost never carry cash on me anymore, and I almost never use my debit card because I've converted to a credit card. And I'll actually post a referral link if you guys are interested in a cashback card. One of them that I own is Capital One, and it does a 3% cash back on your card, okay, for restaurants. I think 2% on groceries and 1% on other. But I'll put my link in there. And what I normally do is I make my payments on time, so I don't have to owe any interest, and I can put money in my dividend stock. So if you want to be frugal, get a little money out of it, and even your leftover money from your cash back, you can either pocket it and throw it in your dividend portfolio, or you can just spend it on groceries. So credit cards are huge. Like I was saying, I don't want to jump around in a few things, but credit cards are huge. Okay, banks are issuing credit cards. They're very careful, and they love to get money off of you and interest. Okay, so I'm gonna show you this stock and why I think there's a lot of potential. So let's check it out right now. So that stock is KeyCorp. KEY is the symbol. I actually have their cashback card, and I actually have a car loan through these guys. So they're making a small amount of money off of me from interest from getting a credit card loan. But these guys have not done well against the S&P. Past 5 years, they're doing very well. And then the pandemic hit, and they took a nosedive, and they're slowly catching back, making a huge rebound, okay? And they're keeping up with the S&P. So the financial sector has done well against the S&P in the past year. It has actually beaten the S&P index. So now you're looking at as someone who has a traditional or Roth IRA, you could just reinvest the dividends in the stock, okay, and just in the long run take it out for a traditional or Roth IRA. Or if you're a day trader and you just want to buy and sell, it's going back up. Okay, I'm not a financial advisor, but I like the way things are going with this stock. Now, I always say when it comes to bank stocks, take it to the bank. Okay, think about it. Think about that. Banks, you have to be really stupid or an idiot, or the board of directors have to be a bunch of morons to actually bankrupt a bank. Banks get bought off. Okay, what happens if Keybank gets bought off by someone like JP Morgan or something? They can get acquired. That happens. But banks are just, they make money. They're a money-making machine, okay? Before it was like they're passing out, loans like crazy, people who really couldn't afford houses, these type of houses. And then the bubble happened with the recession, with the housing crisis. But I think they a little bit woke up, which is important. So we need to really understand Keybank and how it's doing, okay, with its history, okay. But let's look financially. When I look at banks, I really want to see how they're doing financially, okay. So that's one thing we need to look at. Okay, so they list these guys as overvalued. I'm on Yahoo Finance, and in the 52-week range, it was $9.05 to $21.81. It's a PE ratio right now is 16.33. The beta is 1.55. The market cap is 19.96 billion. Okay. Earnings date is April 20, 2021. The dividend yield is 3.61%, which is not bad. Okay. So financially, how are they doing? Okay, we want to look at that. I like going to Yahoo Finance sometimes to see how they're doing revenue-wise. It looks to me as if their revenue is increasing. Okay. I'm just looking at a few other things that, or if there's any red flags or anything. But, okay, let's look at this, okay. Basic average shares, diluted average shares, rent expense supplemental. So the revenue is increasing. That's something that's attractive to me, okay? And the PE is not bad. So let's jump to the dividend history real quick. So 2013, 55, or 5, I almost said 55. Geez, I must need some glasses. 5 cents to 18 cents, okay? So we're talking business right now, okay? PE ratio, like I said, 16.3. The annual dividend is 74 cents. The dividend yield is 3.55%. It's not bad, okay? Now, one thing that I like about Keybank is it has split its stock. So we're going to look at that. So 98, it was 2 for 1. 92 is 3 for 2. So that's something that eventually, okay, these stock splits can increase. I mean, eventually it will. So you invest now if you're young, reinvest, 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 and all of a sudden a stock split happens. That's one thing that I find very attractive with a stock. Eventually, I think it will. It'll start getting bigger. Now, what really hit these guys, I'm telling you, was that recession. They were like, they were bad shape. They're slowly rebounding. So that's what's good about these guys. They're rebounding. They're increasing their dividend. Okay, they're in demand. They're a bank stock. I'm telling you, rates. If you look at what happened with my rich uncles, which is now Motive. Now, rich uncles went down the tubes. Okay, they're a real estate investment trust. This is a bank. Okay, you're making banks from loans and loans, credit cards. It's very hard to lose money. I'm telling you. I mean, people pass out loans for cars. These guys, have a pretty good. I mean, I got a pretty good percentage on the loan in my car. So that's one thing that looks very attractive about these guys. The revenue is increasing. Okay, PE ratio isn't too bad, and they have split their stock in the past. So that's one thing that I like about those guys. So I'm going to jump to another stock that I used to have. I sold, probably buy it eventually, but it's another good regional bank. That stock would be Regions Financial Corporation. Like I said, I had it and then I sold it in the past 5 years. It's actually beaten the S&P. Past year, it's been killing the S&P. So it also has a very nice stock split history. Financially, they're doing pretty well. So I really wanted to focus on Keybank. Regions Financial is doing very well, and they're $6.76 billion. There's some all across. There's actually some, they're getting bigger. Okay, and they're down. Okay, they're way down, and I actually sold them when they were way down, and I made a pretty good profit from those guys during the pandemic when it really hit. So I'm going to show you their dividend history real quick. I'm going to be a little bit more in depth with Keybank, but I'm going to show you they do have a stock split history, which is also attractive about, they're very attractive with this one as well. This is a good one to put in your traditional or Roth IRA and or your dividend portfolio. But still, when I look at bank stocks, one thing I really like, what I was saying before, is a stock split history. So these guys have split. A lot of banks always split all the time. They just get too big, too powerful, and nobody wants to put money in them. So they have a very strong board of directors, and financially they're doing fantastic. Now, they're not making as much as some of the bigger banks, but still they have a good reputation. So let's jump to their stock split history. Now, this is what's crazy about these guys with their stock split history is a 2 for 1 in 84 and 86, in the 90s, 11 for 10. So potentially in the future, there could be a stock split history. In the 90s, they were huge. Recession probably was a big problem, but these guys are starting to get bigger and faster, and they're growing pretty quick. So very good stock, great traditional and Roth IRA. So that's one thing to look into if you are a dividend investor and you like stocks that have stock split history. This is a very good one that may have some potential in the mid 2020s and stuff. So that could happen if these guys start blowing up. But let's look at their dividend history, and then we'll conclude my thoughts on both of these stocks, especially KeyBank. In 2013, it was 3 cents, all the way to 15 cents, a PE ratio of 20.81, a dividend yield of 2.89%, 0.62 annual dividend. So it's not as big as KeyBank, but its price per share has gone up pretty well. And it's a very good stock in the long run to increase its price per share and have a decent dividend. I mean, 2.89% is not bad. But, if you want to compare to JP Morgan, I mean, there's no comparison. JP Morgan's bigger. Their dividend yield is respectable, and they're JP Morgan. So that's one thing. If you compare these three stocks, Regions Financial, KeyCorp, and JP Morgan, JP Morgan's way better. And JP Morgan generates a lot more money. They're more well known. They have incredible credit cards, but Regions Financial actually has a pretty decent credit card as well. So to conclude everything, when you invest in a bank stock, I like to look. I'm going to give you 5 things to when you end this video, and/or if you're new, make sure you subscribe and hit the notification bell so you don't miss future videos if you're new to my channel. So I'm also going to say in this conclusion, I'm going to have my mug out there. So for you guys, if you're interested, it's right around $10. The other thing is I'm going to give you an affiliate link to a cashback card that I use if you're interested in that. I do get a little bit of kind of like a bonus, but that's not really, it's not really a big deal, and I'm not trying to get money out of you, but I just like that one, and I don't mind getting a little piece of the pie when you sign up, but it's a very nice credit card to look into. If you have a good score, it make sure you read, everything. But I really like that card, and I did do a review on it a long time ago when I was wondering what the heck to do with my channel and figure out my true niche and where, which way I'm going to go, because I went from nursing and fitness to doing weird reviews to doing this, and now I found my true niche. But I did do a review on some credit cards that I had, and I'll put my affiliate link in there if you're interested. But banks are always going to make money. I mean, look what I'm getting right here. Loan rates. I'm getting this right in front of me. And investing in dividend stocks, especially bank stocks, you kind of go with the flow. So one issue is there's a pandemic or a recession. Financial sector takes a big blow, as well as the real estate sector. So I really capitalized on a lot of these stocks. Franklin Resources is one of them, as I did a video on them. But these are 2 good bank stocks that they have potential. They have increased their price per share, and they've done well against the S&P. So I don't see a bank doing anything. Look at this. I'm getting Chase right here, in the corner when I'm reviewing this with you. So it's crazy, but credit cards, everybody carries a credit card now. Credit card debt is bad because then you can't buy dividend stocks. So make sure that, and they have in Capital One, with most credit cards, like my KeyBank one, I mean, they make sure that if you work with them, say I want to make sure my settings are here, get my payments on time, and you leave me alone, and I never have to look at anything. I know my statement balance is always going to get paid for. Capital One does that, as well as KeyBank. So they're very professional about that. Customer service is huge with bank stocks, or else people will just get pissed off and go somewhere else. So you don't want to lose your client or your customer. So these guys are very careful. They're very professional. They're very organized. That's one thing that I like about bank stocks and financial stocks. They're in my opinion, they're one of the best customer service. I've never, if I had an issue hey, what the hell's going on here? They said, come right in, we're going to talk, no, we're going to fix this. Customer service is huge. And I'm telling you, just go into a bank, just look at the customer service there. And that's because, they lose a client, they lose money, they lose interest, and they're very, very professional, very excellent. They tell you how it is. So that's what I like about a lot of these financial stocks. Now, Wells Fargo is a different story. Those they were pretty shady. I got shafted by them one time, and I will never buy a credit card from them, but I'd consider buying a stock in them. So let me know what you think of these two videos. Again, if you are new to this channel, I try to post stock and dividend analysis videos at least every 2 days. Uh, and what's funny is Invesco QQQ. I am going to do a stock and dividend analysis on Invesco QQQ. I think I'm going to do that next week, and I've been waiting to do that one. It's funny that just popped up, but there's a lot of things that I'm looking into. Invesco QQQ, it's a very interesting stock because, some people have it in their dividend portfolio. Some people have it in their Roth IRA. Some people have it in their traditional IRA. I find it very interesting the way people invest in that ETF. But I'm going to sum things up. I'm going to quit rambling, and you guys take care and have a good one.